today we have a presentation. We have a presentation on neobanks, which is a very popular concept, nowadays. And so I was thinking about this, in reality. So we have seen quite a lot of changes in the banking sector. So the traditional banks are gradually, they cut down their scale, or they are disappearing. For example, in the time I live, actually, after COVID, NatWest has disappeared, and then HSBC is now, the building of HSBC is now on rent. So that means they have moved out of the high street of this small town. So I think so that is very logical, because people do not go to banks physically. And of course, we saw something like challenger banks and new banks, digital things already after the financial crisis. But I think it is more and more after COVID, and that's why we are talking about the changes in the banking sector and the new force that has been growing actually very rapidly in the banking sector. So they are new banks. So I think for people who are working in related to the financial system, and particularly the banking sector, we should know this. At least if we should know more about that. So, so today we will have actually two presenters, and one man and the other one is coming to the discussion. And the special thing of today's presentation is that we actually have two, let's say, practitioners or people who are very close to the practice. So I think we have two consultants who have been working in this in this area, and I have to say, I remember we have had a presentation last week by Sherry, and that was on fintech as well. So this is the third presentation of our special sessions and surrounding the project that I mentioned before, but I would mention it again. So this is the third presentation, third paper out of the 4 special sessions of the research project on UK-India Bilateral Trade in FinTech and FinTech-enabled Services, emerging trends and potential for growth. And this is financed, sponsored by ESRC and some funding in India. So let me go to Rashika is here. So Rashika is going to present. Rashika is actually a research analyst of a firm, consultancy firm, and that is called Twimbit. I understand it's a big consultancy, but this one is based in India. And Rashika has been working in banking, has been working in research actually related to the banking sector, and I think she has engaged in particularly data-driven analysis. Yeah. So so Rashika, welcome to us. So as I said, we do not very often we have a lot of academics who are presenting here. So I think today we are very interested in your insights about these newer banks, and I'm sure you know more about the industry. So we hope you can provide us with information as much as you can. Thank you. So the floor is yours.
Thank you for such a great introduction. Hi everyone, good morning and good evening from India. This is Rashika Sethi, and my introduction has already given to you by ma'am. So I won't take much of your time, and I'll quickly start with presenting. So I'll present my screen and let me know if it's visible to you all. So I'll start. So today I'm here to talk about the impact of neobanks, and specifically we're gonna compare India and UK scenarios. So neobanks are completely online sort of banks, which don't have any branch, and you can anytime from anywhere open an account, ask for loan, investment, everything. So bank in an online mode. There are no branches, and you can have that app and you can do everything. So a kind of digital banks. So I'd say the banking and financial services industry has undergone significant change and transformations with the advent of technology. And one of the key areas where technology has had a significant impact is the development of digital banking channels. So, bank and NBFCs, that is non-banking financial companies, are investing heavily in research and development capabilities with which to improve their digital front end offering to upcoming generations of consumers who prefer electronic services as compared to traditional bank offerings. So because we have Gen Z's, we are getting more technical technologically advanced, so why to stay with that paperwork of going to bank, and to avoid that hassle. Here we have neobanks. So neobanks, or say digital only banks, are transforming the financial sector by leveraging AI and ML to provide personalized financial services. And India and UK both have their own big neobank ecosystems. So, despite gains like the hype all about neobanks we have now in the market, neobanks do face challenges like cybersecurity and low investor confidence. Regulators play a vital role in mitigating these risks because we know regulations and policies do serve as a challenge. In India, neobanks provide financial services by partnering with licensed banks, that we say traditional banks. So they are not operating independently. They are either they are partnering with some big old traditional bank, or either a big bank in India is having its digital arm in terms of digital bank. So as the Reserve Bank of India guidelines do not allow for complete digitalization of banks, so in India neobanks provide financial services by partnering with some licensed banks. In case of UK, if we see, a mix of organic licensing and partnership had been the erstwhile strategies used by neobanks to enter the market in terms of, you'd say, partnering with some bank. Then a neobank market landscape in terms of, if you want to look how globally the things are working currently. So worldwide, financial services are set for explosive growth in terms of, if we see how technologies are playing the role, and with the neobanks leading the way. So the graph here shows the neobanks maturity index 2021, developed by this index is created by Twimbit itself. So which measures the degree of maturity of country's financial system in supporting the growth of neobanks. This index is based on various factors and is divided into four categories, as we can look in the graph, which is regulatory initiatives, and then we have rise in number of neobanks, and then we have four type of categories, that is skeptics, leaders, laggards, and then we have pragmatics. So Singapore and Hong Kong and Australia are leaders in the neobank maturity in Asia Pacific region. These countries have strong regulatory environment. So why they are are leaders? Because of their regulatory environment, high digital readiness, and large and growing market opportunities, whereas India is classified as skeptic in the index as it lacks formal digital banking regulatory license and the environment, because the government here is not so much uh, in have great trust in its growth. So laws and regulatory policies are much on a growing stage and developing stage as of now. Then if we see this graph and how India is becoming the new hub for neobanks. So over the last 4 years, nearly 36 neobanks in India have been competing, acquiring customers, and creating niche in the banking and financial sectors. Neobanks in India are growing rapidly at 43% CAGR. And if we look out of these 36 neobanks, customer base for only 17 banks in 2020 was around 290 million. On the other side, we have table with name of neobanks, their founders, CEOs, and their headquarters. Then neobank segmentation by customer type. So we know that mm, basically people of middle age, if we come to like 40 years to 60 years, maybe these people still prefer to go to branch, get the passbook thing done, and open the account. But how Gen Z and millennials are changing the scenario is because India has 55% of millennial and Gen Z population, and neobanks are catering to diverse customer segments, including SMEs and specialized sectors as well. So, another important insight lies in the target market and customer base preferred by these neobanks. Razorpay and Open are two neobanks, and both of these focus on SME, small medium enterprise clients, in addition to retail segments, highlighting the potential that can be realized by extending digital banking solution to businesses and commercial clients as well as individual consumers. So all the names that you can see, Neo, then we have Jupiter, Flowbase, Paytm Payments Bank, everything. These all are neobanks, but came in different categories of neobanks that I'll share or discuss in the later slide. So these are specialized neobanks that I said, Razorpay and Open, and these neobanks support the need. Like we have special neobanks that support the need of women entrepreneurs and dairy farmers also in the rural sector. So suppose that there is a bank name, uh, and that bank specifically caters to the needs of women, how we can bring women into the financial inclusion in India, how we can make women of India, rural India, more inclined towards financial investment and everything. So yeah, Lakshmi Bank, LXME Bank in India is doing a really great job. We had a conversation with her as well in the past month, and I guess they are doing really good. Then coming to neo classification in the Indian market that I was just mentioning, that the categories of different types of neobanks. So neobank is the major big umbrella under which we have different categories. So in India, neobanks follow two primary models. So digital platforms and payment banks. So digital platform partner with incumbent licensed bank to offer over the top services to the consumers, but renting the balance sheet of the bank, of a big bank. Whereas payment bank license enables an entity become an established narrow bank that can issue deposits only up to INR 1 lakh and earn income from high liquid assets, fees from distribution, and focus majorly on financial inclusion. So we have two types of categories of neobanks that I explained, and we have examples as well. So all the payment banks in India, Paytm is a big one, have a huge customer base, after which Fino was introduced, and then we have Jio and Airtel Payment Bank who are doing really great now. Then in terms of digital platform, if we look, FamPay is a neobank that caters to teenage population, uh, children below age of 18. So because in India you need to have documents to get an account open, otherwise you will have a minor account. But FamPay gives the kids their own debit card, they can have their own type of savings, so it's kind of a bank for teenagers. And then we have been in Neon, a world class thing. I get for me, it's a thing like how Neo offered a numberless card to avoid the threat of getting the card lost and everything. So Neo came up with a card that had a chip and it's numberless. There's nothing on the card, so that if it gets stolen, then to avoid the misuse of it. Then coming to market drivers for neobanks in India, so we can clearly see there are six key drivers that are shaping the neobank landscape in India, particularly financial inclusion, open banking technology, data monetization have matured in context of Indian economy, while others need further improvement. So how population data based on, because banks are offering rewards based on your choices now. So suppose you are using a bank and they offer you access to lounge, uh, discount on e-commerce sites, on food sites, on travel sites, but then you think that you want reward points more based on a particular uh, your things that where you spend majorly. So how data monetization is coming into play is a great role that neobanks are catering to with their data capabilities. So use of population data based on social media presence, economy activities, they are building the personalized experiences. And that is a thing to see on, because then there will be a competition between how traditional banks are operating and what neobanks are offering to the users. Then, if we look at regulatory policies and proposal for licensing neobanks, so as India lacks formal digital-only banking license. No bank can completely operate in a digital form without, having a partnership with the bank or without getting a licensed bank from some bank. So, proposed regulatory framework for neobanks in India involves a phased approach to licensing, which include four steps and various conditions to apply for full stack neobank license. So currently, I guess the government is testing it, and we have regulatory sandbox concept, which I'll discuss in the later slide as well. So we have here the table of conditions, which include minimum paid up capital, phased relaxation, equal access. What all is required to get a full stack neobank license in India. Then challenges in the Indian banking industry. So we have a huge chunk of underserved population, a very tight regulatory compliances, and slow technological evolution. So even after new banks have come into play, there is a lot of competition in India that is currently happening, coming of UPI, UPI Lite, UPI X, all those things. There's a lot going in the banking industry, but still bringing those underserved population into the mainstream banking industry, it's getting tough, where neobanks are playing role to get people from rural India, underserved and unreserved people into the mainstream and getting them on board in this digital India thing. So challenges, as I mentioned, regulatory restriction, there are multiple regulatory compliances, a big fees, then you need to have a minimum paid up capital. So all these prove as challenge for neobanks to further grow, because then there are few restrictions that you need to comply to. Now, if we compare UK neobanks to India scenario and what is happening in UK neobank market, so on the other side of development and geographical sphere, in UK, a monumental loss in consumer confidence for traditional bank can still be felt, owing to instances of recent cyber attacks, which led to reduction in operation by seven large banks. We know these big banks there. So there are more than 20 neobanks currently functioning in the UK, with few of these registered in other geographies, including Ireland, Germany, Netherlands, Hong Kong, and France, Finland, etc. But I guess major neobanks like Monzo, Starling, and Revolut has gained prominence in past few years. Despite developments in UK fintech economy, I feel there is room for significant expansion compared to how Indian neobanks, bringing updated features related to technology, personalized app theme, a numberless card, then neobank for teenagers, so neobank for digital farmers, catering to specific customer needs. I guess there is a room for significant expansion in UK market economy. Then strategies of operation by these three neobanks in UK. So Revolut, Starling, and Monzo differ in their strategies, how they cater their number of business customers, retail customers, and how they operate. So table here compares three large neobanks in the UK, showing different strategies of operation by each in terms of market served. So if we look at Revolut's aim of emerging as global neobank stands in contrast of Starling's strategy of only serving in British Isles. So if we can look at the geography served here, Monzo is just operating in UK US, Starling is in UK Ireland, but Revolut had gone a step ahead. The bank is operating in 35 plus countries as of now. I feel UK, Europe, USA, and covering the whole Asia Pacific. So uh, this bank will stand out as compared to Monzo and Starling Bank in long term. Then customer base of digital banks. So figure here showcase gains by Revolut in achieving faster customer milestones and enjoying exponential customer growth aided by rapid expansion, because we just saw how Revolut is operating in more than 30 countries. So obviously the customer milestone will be exponentially grow. And Starling Bank is shown as the second fastest neobank to acquire 1 million users as of now. Revolut is also leading in terms of funding and in terms of valuation. So then again coming to full stack versus front end focused neobanks. So if we compare to India model of partner banks offering digital services by liaising with traditional banks, because in India banks need to partner with incumbent banks or get the license of big bank. But British fintech regulations allow for neobanks to apply for full-fledged banking licenses. UK allow neobanks to apply for full-fledged licensing, leading to two categories. Then we have full stack neobank, and then front-end focused neobank. So the categorization of money is open and tied as front-end focused neobanks highlight their respective business models as suited for growth, sustainability, via partnership with license and legacy banks. So full stack neobank and front-end, we have a table over here. So front-end doesn't have any banking license. They can partner with some other licensed bank or some legacy bank. Whereas for full stack neobanks, it's come mandatory to have a banking license, and they can offer product and services without having to partner with any other bank. And we have great example over here like Open, Revolut, Tide, Monies, all are front-end focused banks. They are partnering with some or the other bank. Whereas Tandem, VBank, Starling, Monzo, they all are operating individually as full stack neobanks. Then coming to regulatory sandboxes, as I was mentioning previously, what all this regulatory sandbox thing is about, how banks are applying for it, and all those things. So a key component of regulatory measure is a concept that is termed as regulatory sandboxes, which could serve as a vital element for neobank growth and sustainability across developed and developing countries alike. There are several objectives with which regulatory sandbox can aim to boost development in fintech and neobank industry. So if we compare regulatory sandbox in India and in UK, so a comparison table is over here. So comparing both regulatory sandbox in both the countries highlight differences in themes, sectors, and capital requirements. So, for from an overall perspective, regulatory sandbox in both countries is loosely defined as of now for the same objectives. However, it may be argued that they seek to grow the sector in future, because currently it's loosely defined and governments are also not so sure. There are claims to contrary amid calls for eased regulations and relaxations of policy in both the economies. Now, if we if if I term to conclude this presentation, before that, uh, as I am currently working more on customer experience for these digital banks in India, Malaysia, and across Asia region. So from my knowledge as of now, there are a lot of things that neobanks can improve in order to compete with traditional banks, because how neobanks, uh, due to lack of regulatory policies, regulations, or not so strong support from the government, but new banks have that idea where they are utilizing the technology to gain the attention of people like us who are who don't want to go to the branch and get things done by in a physical manner. So with the single tap, everything is in your banking app. So customer experience again brings a major challenge for neobanks, because if they are not providing that differentiating factor for customers, they'll still lack and won't be able to compete with traditional banks in future. Because traditional banks also has understood this thing, that in order to stay in the market, in order to get more customers, they need to upgrade to more advanced technology, provide more seamless experience to the customers, else they lose their customers to digital banks. So in conclusion, neobanks are reshaping the financial landscape globally. Both India and UK are offering unique challenges and opportunities for neobanks. Neobanks are experiencing increased competition from traditional legacy banks in the digital space, but there is optimism based on their growing numbers and customer bases in countries like India and UK. Partnering with non-banking financial companies and then diversifying their revenue streams can enhance their prospects, because neobanks are getting third-party integrations within their banking app. You can have everything in that banking app. You can shop, you can get the rewards. There is a lot of cashback they are offering for using the payment. So one example, a bank in India, that is Jupiter, is doing so good in the market currently. I just want you people to look at how they are, the experience they are offering to you. So while suppose you are using the banking app and then you are stuck in between the so you thought of opening an account with the bank, and then it's a zero balance account. You don't need to pay anything to the bank. You just need to open the app. You say, I need to open the account. You tap open an account, call to action, and then you shift to next screen. But the time that the app takes to load, they offer a game kind of thing. They gamify your experience, so the customer stays there. He doesn't leave the process in between and moves to the other thing. So how they are gamifying the experience, may so you can just open the account using that app within less than 2 minutes, I guess. How they are auto saving your details, auto fetching, so you don't need to fill in the information manually. So everything that neobanks are doing, I think they are a thing of future. They are surely a thing of future, because till now, if I use a traditional bank in India, suppose I'm using the app of Axis, HDFC Bank in India, so they still lack that technological advanced features. They are still operating in that traditional manner. If you are able to open the account online, but then there again will be there will be a need to visit the branch once to get your verification or your KYC done. So how neobanks are completely digitizing the experience is a big thing. So choosing the right neobanking model, whether full stack, online, or in partnership with traditional banks, it requires careful consideration of market conditions and internal factors. So we'll see how neobanks gonna operate in long term in India and UK. Regulatory authorities also play a crucial role in fostering neobanks growth and ensuring customer safety through initiatives like regulatory sandbox approach, because then regulators also need to be sure uh, that whether this bank on go bankrupt or would fail in the economy, with potential for further expansion as seen in India's move towards full stack digital banking license. So I'll conclude my presentation over here, and thank you for your attention, everyone.
And thank you very much. I think you deliberately you added some practical side, the evaluation, your own understanding, so that which is very helpful. I do see we have. Let me find out that. So sorry, Varnika, right? Varnika is now here. So Varnika,
Yeah.
do you have anything you think you can add to at the moment? Just add whatever you can think of.
Right. So thank you so much, and a very good afternoon, good evening to everyone present. I think my colleague Rashika gave you a detailed presentation of what is the impact of neobanks in both India and UK, and what practices can be shared between the two countries. So digital only banking we learned from China and UK because they were the first adopters of digital only banking, but India has become one of the leaders in driving virtual banking across the globe. With the highest number of digital only virtual banks in the country, driven on open banking and banking as a service capabilities. The only difference which we largely feel is UK is a much more regulated, controlled market with its own banking regulations, which are following from the Europe and UK both together. While in India, it is largely governed by the existing licenses of our traditional banks, which have the control over the customer's ownership, whereas the digital only banks do not have the control over customer ownership. And that's a very big factor in terms of controlling customer data, in terms of increasing the per capita consumption of services for the customer, which is largely controlled by the likes of Revolut, Monzo, by their own selves and do not have to share that ownership with any traditional bank in the UK. However, it is not true in India. So, because we do not have formal regulations in India to have digital only banking license, the customer ownership still lies with the traditional banks. Whereas the digital only banks, like as mentioned by Rashika, the likes of Jupiter, Neo, etc., can actually use their licenses and innovate on top of them by creating innovative products, by ensuring that the new youth generation of India can get hooked onto these products and experience financial services in a different way, and it's more embedded in their everyday life journey. Today what we're seeing is something that is emerging very strongly in the banking sector, especially in neo banking sector, is customer journey management, where the banks are striving to now get embedded in the daily lives of the customer rather than just being a service provider for banking and financial services goods. So the banks want to be in the likes of digital natives, where today, if I'm stepping out of my house, my bank knows that Varnika will secure a coffee from X coffee shop. She will then actually park her car at this parking slot. She will then join her office. She will make XYZ payments. And then she is also at a milestone of her life where she might be looking out for a new home or a new place to rent. How can we support her? How can we create personalized experiences for her at every step of her life journey, every daily life activity for her? Manage subscriptions, etc. So I think that's the next step where we are actually embedding into the lives of the customer, and banking becomes invisible. Till today, it is virtual, but I think from the future standpoint, banking will become invisible, and it will no longer depend upon which platform are you banking from. But as long as the customer needs are being met, um, the banks will be able to serve their customers very effectively and still be profitable. So I would conclude on that. I hope everybody enjoyed the presentation and the insights. We're open to any questions if you would like to share. Ask us.
Yes. So before that, Vanika, thank you very much for the addition. I have to say, introduce a little bit about Vanika. Vanika is actually the research director and co-founder of Twimbit. So basically, you have been working, for this in this industry for quite many years.
Right.
And
Yes.
and that's very good. And Vanika, let me start with what you just mentioned, and which is very interesting, and that is the customer life journey. And
Right.
maybe I was thinking about that. So if everything, so for example, if I work with a neo bank,
Right.
I do not know to whom that I have contacted, and I even do not see who is that person. So
Right.
from that perspective, to be honest, I'm a little bit afraid of this. Everything is hidden, it's secret. So I still
Mhm.
prefer. So I still prefer actually to go to reputable traditional bank, so that I feel a little bit secured. So for people who are here, we know in economics, we have a very popular theory, and that is in asymmetric information. So for this newer bank, which can be just a one person business or something. So, okay, you correct me later. But to be honest, there is an information asymmetry problem here. So, and that's something that came to my mind when I was thinking about why do people go to neobanks? And of course, it's more efficient. And of course, I do not need to drive to another town to a bank branch. But still, there are some other issues, just like what I just said. So that's one thing. And the other thing is, so nowadays we are talking about neobank is a type of digital. It's pure digital, right? It's pure digital bank, including your lending and business and also financial services. So I was thinking about this technical thing. So how do you compete with large-scale traditional banks that have a lot of money investing in new technology? So where do new banks find these sources of financing for them to invest in up-to-date technology? So that's probably my another question. And related to that is the data management. So there are a lot of debates about who owns data and whether or not there are some protection. So, and this type of things, I understand now that in the UK, they are regulated to some extent, but still I can see the problem. So what about the data ownership? So so that's something that I can ask at this moment. And I think if you can discuss those issues, we all can benefit from that. Thank you.
So I'll answer the first question where I was mentioning that the fact that it's a matter of consumer mindset for with respect to trust and security when it comes to a traditional bank versus a neo bank, which is completely something on the cloud and you don't have a face to it, right? Now there are different customer segments that the neo banks are very clear about that they are following. So when it comes to traditional banks are serving every customer segment. By customer segment, I mean somebody who is new to the bank to the customer at any given age, somebody who's a middle age income owner. Then the other one would be a retirement old age who would like traditional banking practices. There are SMEs, then there are enterprise corporate customers. So traditional bank has a huge portfolio. But when a neo bank comes into the market, like historically in the last 5 years, I mean by historically, what we have seen is that neo banks come with a very definite customer segment that they want to target. One very popular customer segment will be the youth, Gen Z, starting from the age of 15 to about 25, 30, where they understand that this particular youth will or this particular age group will be very agile in nature and will be ready to accept everything on the click of a button because they come from that age where the age is about gaming, the age is about social media, the age is on TikTok, and they can actually pick up doing banking at a click of a few buttons, and they do not worry about security, but they worry more about features. That do I get the right features, capability, and convenience of banking rather than trust and security? And at the same time, this particular mindset of users is of the fact that we are not here to park our money, which is large amount of money, because neither are we earning that much amount of money nor are we investing. So we've just started our custom banking journey, so it will be very small amount. So there is the opportunity loss for them is not very much as compared to a traditional banking user who's who has a very stable salary, growing salary, maybe at a stage in their midlife stage where they want to make investments, buy a house, buy a property, right, get into major milestones of setting up education funds for their kids, etc., but they need to park large amounts of money, and that the data and security for them actually makes a lot of sense, and in terms of human connection with the banker makes a lot of sense, because then they need, with the large amount of collaterals that they are submitting and the amount of money that they're parking with the bank is huge, and they need that kind of comfort, and they need that kind of backing that this bank will not go bankrupt even if anything goes wrong, right? So then this is one set of segment. The other segment is SMEs, right? If you'll see, a lot of neobanks that have come in is to solve SME problems, but not SME problems in the sense that providing them banking needs of just opening a bank account. Those banking needs will be beyond just SME banking, which involves they will manage their payrolls, they will manage their reconciliation, they will manage their invoicing, they will help them tax management, they will help them register their companies for entrepreneurs and freelancers who don't know how to do it. They will also help them managing taxation and all digitally via dashboarding. So that is another use case which has become very popular. The traditional banks do not offer it. And traditional banks are only restricting them to just come, open a current account, manage your payments, and secure a working capital loan. And for a small, medium enterprise, it is largely very difficult and cumbersome to get that from a traditional bank. And here it is happening through a click of a button, which becomes simplifies their journey. So, in terms of cus- customer segmentation, is very clear with neobanks, and which is actually separating them to target their customers, and which is why you would see there is a huge jump in when a new neobank is launched in the market. The customer acquisition is very high, right? And then the product innovation happens at different stages of their maturity. They will initially start with acquisition when they will ask a particular customer to onboard, and that's purely through a savings account or a current account. They actually start making money at a very later stage when they have enough active users on the platform to sustain and start increasing the customer product portfolio, which is adding lending, because purely banking is based on lending. Revenue can only happen if you lend money and interest income comes for a bank. So any bank to be successful, whether traditional or a neobank, it has to get into lending. Other aspect to it, and this will answer your second question, part of your second question as well, is they're making money because now they've created a new model of membership. So if you're a part of the neobank, you're not just taking their services, but if you want add-on services, you pay them a subscription fee, like your Netflix, Amazon, etc. So that subscription fee becomes their fee-based income, and which is a very large portion of them earning revenue, because it's coming from the fact that, if you become a member, you will not just get a current account or a saving account, you'll get a forex account as well. You can open a forex account. You can manage your account, money in multiple currencies without getting paying that in additional currency charge or fee, etc. So again, that is an important factor. The other is through partnerships. They bring in new partners. They bring in a lending partner who will have a lending license. They'll get an insurance partner who will have an insurance license on their platform to sell those products. And in turn, they will charge a merchant fee. Again, a fee-based income source, but it's actually adding a new income source for them. And then the part about your third question on data privacy, and definitely opening up ecosystems have created a turmoil in terms of who owns the customer, who owns the data, is my data secure or not? Especially in the UK, we already have data controls, we have the GDPR. We also have a open banking committee associate, which is openbankinginstitute.org.uk, who's actually managing open banking practices on a day in and day out basis to ensure that the data of the customer is not mistreated, it's not misused, and it's not transferred by using illegal practices, but is done in a regulated format with an open banking standard. Whereas in India, we have a different format where banks are regulated tightly and stringently regulated in ensuring that any data that moves out from their ecosystem to a third party is based on the regulations established by the Reserve Bank of India, and which is why they have not ensured that there are licenses in place purely to give out to digital banks. However, they have only restricted that to traditional banks. So only traditional banks can offer core banking services, but digital banks cannot. So that it's only because the trust, the amount of data, and obviously the population size is large to ensure that there are no major fallouts that happen in the future, which is a major reason why likes of Revolut and Wise in UK are still not able to become of pure play players in India. They have not launched their service, whether their announcements to entry had happened 2 years, 2.5 years back. So I hope I answered all your three questions. If there's anything, please feel free to ask.
That's really, really helpful. Thank you very much. And Rashika, before I open the discussion to the audience, do you have anything to add in response to those three questions?
No, I guess Varnika has pretty much answered everything perfectly. Yeah.
Okay, great. So we can now collect some questions from our audience. Oh, Shula. So I saw the name here. Yes, we have this Shula. Is that the pronunciation okay? Shula?
Yes,
Yes.
Professor. Okay,
Yeah.
that's correct.
Hi.
Thank you.
You have a question, right? Please.
Yes, I have a question. Thank you very much to the presenters. Honestly, I'm still yearning for more because this is a field in which I'm researching, and I think let me kindly request that perhaps I get engaged with you outside of this seminar. So my research is around the efficiency that these neobanks are bringing to the traditional banking. So because the setup that you explain, where traditional banks are actually providing the base on which these neobanks are operating, is the setup that we have also. I'm from Zambia, by the way. So they don't operate as independent neobanks, so they are working in collaboration with banks. But this has impacted the way the commercial banking is being conducted and the way the banking is operating. And it has implications for the efficiency of banks. So I did not hear you discuss anything in those lines because obviously they're coming on board of these neobanks. They are coming with technologies which in some cases, banks have to interface their systems with the systems of these neobanks. And then in some cases, it's taking out some services like personal services where you had a cashier to deal with people coming to withdraw cash. Now they can access the cash and do transactions online. So it takes away that labor force that used to work on certain services. So it's changing the dynamics in the banks. And overall,
Did Shula put forward some question? Yes, I think probably the efficiency thing. So before we have Shula, maybe we can go ahead discussing, so what do you guys think about that? So what efficiency do those new banks add to the traditional banking sector? And maybe you can expand a little bit on this subtopic.
Sure. Rashika, you want to take this?
Yeah, so I have a point over here talking about the efficiency of neobanks because traditional banks, uh, as she mentioned, there would be no people coming for withdrawing cash in terms of neobanks and compared to neobanks. So if we look at the efficiency of neobanks, as Varnika mentioned, that unless they start with the lending operations, they are not going to make big chunk of money. And then how I as mentioned, how they gonna create the differentiating factor and how they gonna make the experience much better compared to traditional banks is where efficiency comes in. So if they are providing what customer is earning, like wanted, is in need of, so if the neobank are providing uh, the seamless experiences, They are offering the everything in that single app. So they're gonna embed everything, integrate everything in that app. So I guess efficiency is something that the problem can get solved.
Okay, thank you. And Varnika, do we have
I think
more?
that the other angle is that traditional banks on an efficiency are generally lower, right? And there are two ways to assess the efficiency. One is the efficiency that we're assessing in terms of the digital efficiency value of a customer. How quickly are they able to make the transactions? How fast are they are able to open their account? How quickly can they get a loan approval, etc. The other efficiency is their cost of operations, that are they able to operate at a cost efficiency level that is needed for them to ensure that there is profitability or there is enough margin for profitability. While traditional banks are largely on a higher end, where you'll see that their cost efficiency will vary between 40% to about 55%. If they are very superior technology driven banks like a DBS in Singapore or an ICBC in China, the cost efficiencies will largely be between 40% to 55% of their revenue. Whereas for ICBC and DBS, it will be slightly lower, between 38%, 32 to 38%. Um, for neobanks to operate at their cost efficiency level, it is largely easy for them, is purely because they do not have infrastructure cost, which traditional banks have. They do not have large property equipment cost, what traditional banks have. They do not have to enter into ESG practices and CSR contribution as compared to traditional banks, which are regulated and mandated by the regulators. So that reduces their cost of operations significantly as compared to traditional banks. So there, if you look at a PNL and we compare a PNL for a neobank, would be largely driven by what kind of technologists do they have, how many tech operations do they have, what cloud provider are they subscribing to, is there AWS, Microsoft, Oracle Cloud, etc. And their costs will be dependent mainly on those activities. Whereas for a traditional bank, there will be a lot of more PNL items as compared to them. In terms of efficiency, which I talked about earlier, which is digital efficiency value, it will be more around that a neobank will still operate at a much more higher efficiency. They'll be able to open a bank account in 5 minutes, get a credit approval in 3 minutes. The number of steps to open a bank account will be less than 10 steps, etc. Whereas a traditional bank, you might have a hybrid also, that you do half the job online and for the rest of that, you need to go to the branch. Right. So that efficiency value, again, for a neobank will be much higher as compared to a traditional bank. Whereas I do not say that currently the traditional banks are not giving competition to neobanks. In a lot of emerging markets and mature markets like UK, Australia, Singapore, these traditional banks have really stepped up their game with their technology investments and now compete at the same level as a neobank or a digital bank.
So thank you very much for those. I think they are very much to the point as far as I can think of. And Shula, before we lost your connection, Shula, do you still, you heard Vanika's response, right? So do you have more on this efficiency thing, or you have something else?
My apologies. I don't know. I lost connectivity for some reason when I was trying to make a
It's
point.
not your fault. We know that.
Yes, I'm going to watch the video, I think, to get part of what I missed out. But I think basically I would like to interact some more. That's my request. I would like to interact some more with the authors. Yes.
Sure.
Do we have any other questions? Yeah. So I didn't see any hands here. Oh, I saw. Oh, Jaideep, you are working in this area, so I'm expecting that you will ask some Very difficult questions, maybe. JD,
Not at all,
please.
Hong. I'm really sorry. Today my camera isn't working, so I'm just on audio. I just
Okay.
wanted to say thanks for this. It's quite interesting. So a lot of the things that were presented today that you guys are talking about were about sort of the advantages that neobanks have, and like the last point that was made was kind of really what I was looking to hear a little bit more about is how the traditional banks are responding. Now they've got obviously huge amounts of capital, and as incumbents, they've got like two or three different ways of responding to these challenges, right? So they can actually buy the
Right.
neobanks. They
Yeah.
can just go acquire them. They can do all kinds of integration. They can buy the technology. So you
Yeah.
mentioned numberless cards. Chase is doing that in the UK.
Yeah.
So Chase has got a numberless card and a very good, very effective sort of complete neobank in the UK, although it's the world's largest bank. So,
Mhm.
so I'm just kind of curious uh, how you're sort of seeing that side of things play out. Are the neobanks now looking to be bought, like in the software company market, or are they looking to grow independently?
See, definitely, both are active propositions. I would say that there is a third proposition also to develop them as partner ecosystems, where they want to work with traditional incumbent banks as partners in terms of creating and innovating products. And we've seen a lot of these examples across the globe where, for example, there was this big partnership that happened where Goldman Sachs partnered with Apple to launch the savings bank account in the US, and now Apple has become a digital bank with a full stack where there is an Apple credit card, there's an Apple Pay payments, as well as there is the Apple savings card powered by Goldman Sachs. So I think there is an opportunity. What the neobanks are now looking for is where they can capitalize on the existing customer base of the banks, traditional banks, and actually offer new product features in partnership by using their brand value as also using their customer base, right? And which is very big as a proposition that happens in India, where a large bank like an ICICI bank in India will actually be supporting a lot of digital only banks, both in retail as well as SME sector, for them to build products in their partnership where they can leverage their customers as well as leverage their technology stack. And ICICI has developed an entire ICICI tech stack where you can pick and choose products and technology based on their banking as a service proposition and embed that into your ecosystem and develop products over and above that to sell in the market. So you're actually using the best of both the worlds to combine. There's product innovation happening, there is service innovation happening, and then there is brand value creation also happening for both the traditional bank as well as the new digital bank. In terms of being bought, I think the bought category comes in when the bank really wants to enter into a digital banking space and does not want to develop its own architecture. That means that they want to have a separate entity in itself, which is their digital banking arm, which in case that what they do is they either launch a digital bank in partnership with an existing fintech company and convert that into an entire digital banking proposition in which they're buying the technology of that particular fintech company and rebranding it and building it as a digital only bank. And in terms of driving it independently, like what Revolut has done, it's driving it independently and it's untouched at the moment. What Nubank is doing is also at the same level because the amount of scale that they have achieved now, they have enough capital resources and they can raise money from outside as well privately to actually scale in different markets and geographies to become one of the large global digital only banks. So I think all the three of them are applicable in today's market scenario. Depends upon how the market wants to play and how the banks wants to play in the market.
Thanks. Yeah. So basically, if I could just what you're it's not really resolved. That means that what's really going to happen, because the way
Yeah,
I see it, I don't see who's sharing the spoils at the moment. And a lot
right.
of banks, old banks are making are not making, new banks are not making much money really, right? They're losing money at the moment. So
Yes.
okay. There's no you don't have a prediction on which way this is going to go, basically, concentration
See, it
wise.
concentration wise, there will be the biggest way would be partnership ecosystems. Embedded finance, banking as a service, open banking would actually be the major drivers where traditional banks are actually converting their core banking services into open APIs, selling it to these new banks. They're partnering with them and co-branding and selling them in the market. And that would be the larger chunk of the market. We would not see independent new digital banks coming up largely in the rest of the world. It might happen in Asia Pacific, where Vietnam is coming with their own digital banking licenses and give out banking because there is a need for digitalization where the banks still perform very traditionally over there. There is a change in the economy that is needed. Similarly, in small economies like Nepal or Cambodia, but it would not happen in Europe, North America, or the UK or India per se, where or China for that matter, where the economies are very mature and we have already established our positioning in terms of digital banking. There, we will still have a more inclination towards a partner ecosystem developing in the future. Being bought over is something purely dependent upon a particular bank's strategy, where they want to play digitally, whether they want to play an acquisition role, they want to buy the bank, or they want to build the bank. So that's purely dependent on the build versus buy strategy, and that can happen in any market.
Perfect. Thanks.
Thank you.
Okay, thank you very much. Thanks, Jaideep, for your question. And Varnika, and so and Rashika, both of you. So yes, so basically we have been listening to you, and we understand that yes, it's digital that provide quite a lot of efficiency on et cetera, and there's a need further, need for developing this. But at the same time, I'm also thinking the large traditional banks, they are also transferring themselves to digital things, yeah, including AI. So I think the next topic will be how can those new banks? I think I just heard from Jaideep said that actually new banks are not making profit. I'm surprised to hear that. If new banks are so popular, why are they not making profit at the moment? And if they are not making profit at the moment, are they going to play an increasingly important role in the period that we have AI, for example? I do not know. So I think those are the very important issues that probably we can probe a little bit further.
So
what happens
okay,
if
I
all
think
the
this
traditional
is
banks are digitalized themselves?
right. See, it is incorrect to say that all neobanks are not profitable. Okay, there are certain. If you look at Chinese neobanks of WeBank and MyBank, they're profitable. There is no question of their profitability, and largely because they have been in the market for about 7 to 8 years. They understood the market where they had to play. They acquired the customers enough to create stability into their balance sheets, and now there are more chances of creating uh in this entire space, creating more in terms of like a per capita consumption of service, that you're increasing your portfolio and your one customer is consuming more than 3 to 4 services, so there is a stable environment where you can earn revenue. There are still neobanks which are not profitable, and I completely agree they're loss making because they've just started them. Their investments are much higher than their revenue. While they're definitely doing revenue generation, if you look at their top lines, but they might not be surviving in terms of creating a break even or having a very strong bottom line. Is purely because at this stage they are at a building scenario where the marketing efforts are very high, their technology investments is very high, their personal ratio. They're not hiring bankers, but they're hiring technologists. They're investing into AI, as you all mentioned, and all of that comes expensive. For them to actually drive a profitable balance sheet will happen in the next 4 to 5 years, right? Or it will not happen and the bank will shut. And as Jaydeep mentioned, either it gets acquired or it completely shuts, right? But then definitely there are banks which are actually making revenue, but then their current generation, like we said, cost efficiency ratio for them would be right now in at a very higher stage, and their revenues will be some place where their profitability is negative. But at the same time, as I mentioned earlier as well, traditional banks come with huge capital, they have a huge pedigree, there is a legacy involved, and their rate of change is also very, very high because they've started to embrace digital transformation. Started to change themselves with in line to the innovation that is happening today in the various regions. So definitely they're gaining pace, and they will stand at the competition level of a digital bank, and they will start earning revenues through that as well. But at the same time, there will be certain differentiation factors, like we said, customer journey management, personalization, the use of AI, the effective use of AI in terms of credit writing, in terms of credit assessment, credit scoring, management, etc. Different use cases as well, where both of them either work in partnership or in terms of competition would one scale better than the other, right? For example, Upbank in Bendigo, pure play digital only bank, is only surviving on its AI personalization capabilities because it offers gamification. It offers saving spending analytics to them, which are driven by predictive analytics, right? And it's very successful, and it's contributing to the larger revenue of the bank as well.
So that means high-tech firms will be dominating probably, like
Yes,
Google.
like a DBS bank, which says we are a tech company, we're not a bank.
Exactly,
Is
because it's all the
yes,
competition is all surrounding the
right,
technology, right?
right.
Oh dear,
I absolutely agree on that.
that's a
Yes.
little bit scary. So think about who can invent the most advanced version of AI, and then can be applied to. Now I can see that. Yes.
Mhm.
All right. Anything else? No? Yeah, so I think it's very, very useful session for us. So for myself, I'm teaching financial, market things. I know there are something going on, but I have learned a lot today. But I think another thing that actually I was thinking about, that's the regulation thing. I think
Yes.
just like, it's the same. You need to regulate them. Otherwise, everything is going to go the opposite direction. So
Yeah.
so I think the regulation is a very important thing, and AI is important as well, and see what happens. So by the way, do you think that so if somebody who is going to research on, let's say, the new banks, are there any companies that are providing data on those neobanks?
So
Are there any data?
specifically,
For example, a lot of new banks. Do you
right.
have their balance sheet income statement data, for example?
So none of the neobanks actually provide that. We
Exactly.
have, yeah. So we have to conduct primary interviews with the leaders of those banks, or there is only one database called Traxon in India that provides that information, but largely at a very surface level, it doesn't go very detailed in that as well.
That's very, it's pity, right? So, but
Yeah.
that's why they are new banks. Yeah.
Yes.
So, yeah. Okay, good to know that. So I think this is very relevant for us to know. And so we still do not have any evidence. So we cannot evaluate what kind of impacts those new banks have already made in the banking sector or at a higher level on the whole economy, on the financial system. We still do not know that.
Right.
Apart from case studies, apart from like interviews, cases. So Jeffrey, so now you are inspired. You have some questions now, Jeffrey.
Yeah.
Come in,
Hello.
please. Yes.
Good afternoon. Sorry, I missed the presentation. I only just came in during the questions, but I'm if you pardon me if what I'm saying it does not make sense. But I just wanted to know if these new banks, do they take deposits?
Sorry, do they take deposits? Yes,
Yeah.
yes.
Okay, because the reason I'm asking that, if you keep, when you call them bank, do they take deposit and transfer that into loans? I'm not so.
Right.
The other side of things that I wanted to know is, why is it that in some countries, because I remember there was a big debate in Nigeria, I think about 2 years ago, that when the Nigerian government refused to allow the new bank to operate independently, except they are attached to a bank. So in that case, in some other countries where they operate independently, do you think that the ones that are operating independently will never really make profit? Then it will just keep going on just the way we have it, the whole cryptocurrency dilemma? Because if they're attached to a bank, that's where I think they can make profit and they can be regarded as a bank. And in that case, what are the differences? I'm not sure. I think this study is based on, is it India and the UK, if I'm correct. So are they different in that regard, UK and India? Are they operating independently? And if there are other countries where they are not allowed to operate independently, the evidence you have reported, would they be different?
So, Jeffrey, if I got it wrong, that if I got it right, that you're mentioning that if where the banks operate independently, um, they're not able to make profits because in terms of they're taking deposits, but there is no customer trust as well in terms of, whether their money would be safe, etc. And in terms of the other opportunity where they are licensed and they are actually operating independently, how are these two activities, like how are these two scenarios different, right? If I got your question right.
Yes, it's that way, and also because the point I was dragging at is, now I know that there are definitely cases like that. There are some countries where they operate independently, and there are other countries where they are not allowed to. So it's all based on how the banking system is regulated in individual countries. So is it different when I go to somewhere where they are operating independently and where they must be affiliated to the traditional bank? So would the effect be different in that case?
So the difference will be if they're independently, they have much more control over in terms of giving you products, in terms of diversification of product, in terms of classification of products, right? So if you look at a Revolut product stack, it would include multiple things, not just a savings account, a deposit, lending, uh, foreign currency accounts, and multi-currency accounts, etc. But when you'll go to a traditional bank setup where a traditional bank is offering a license to a digital only bank to offer its services, the offers will be limited based on the licensing requirement. So, for example, if a bank has only license to offer a savings bank account, then the bank can only offer savings bank account. It can't offer anything else. If the bank has given the API and the license to offer a deposits on that and charge and in fact give an interest back to the customers, then they will be only able to do that. Similarly for lending, so for each of product service that they have to offer to their customers in a sponsored banking license scenario where they can't work independently, they have to find banking partners, and the product is then controlled by the banking partners, but the innovation on that product is controlled by the virtual bank, which is if once they have offered that particular service, now how you want to sell that savings bank account is up to you. Whether you want to call it something else, you want to brand it differently, you want to create offers onto it, you want to create rewards, you want to create loyalties, etc. That completely depends on you. So product innovation then is on your control, but what product you can sell is only on the control that based on your partnership with the bank.
Okay, that is understandable. But what I would say is that I think this is the outcome of the whole neobank thing. It's all about the regulation. It's all about how I think what I know, probably the literature here is still very new. Maybe this is a way to go forward to compare these two schemes, because I think they are very different. The ones operating with in countries where they are operating with traditional bank and where they are not. So thank you.
Yeah, thank you.
Okay, thank you, Jeffrey, for the questions. And actually, I have maybe I have another question for you, Varnika. And we often
I'm
hear,
so sorry to inter this thing, but I have a hard stop in 8 minutes because the office will shut down. I have to move out of the building.
Just the last
Yeah.
question.
Yeah, so
we
sorry.
Heard, sometimes we heard challenger banks.
Yes.
So what are the differences between challenger banks and neobanks?
There's no difference, absolutely. It's just a terminology because virtual banks, challenger banks, neobanks all mean the same. It's just different terminologies used in different geographies.
Okay, that's good to know.
Yes.
In that case, so I do not see new hands. And I really appreciate your time, Varnika, and thank you very much for Rashika for your presentation and your patience. When we were exchange questions. So thank you very much, and thanks for all participants and for your contribution in terms of the questions, etc., etc. So in that case, shall I close this session and shall we give applause to our presenters and Varnika and Rashika, please. Thank you very much.
Thank you so much. We really appreciate it.
So, yeah, thank you very much and all the best. Thanks. Bye.